Let's look at the market cap of NVIDIA, right? It is now the third biggest public company. It's nearing $2 trillion, and it's made a lot of money for a lot of investors during its run. But our next guest thinks the real opportunity now is outside of that handful of big tech stocks. So let's bring in Rich Bernstein. He's Chief Investment Officer of Richard Bernstein Advisors. We spend so much time talking about NVIDIA and the rest of the Magnificent Seven because, frankly, they've just put up returns that are hard to ignore, Rich. But do you think that run is over? We talk also so often to our guests about the broadening out, our riches sort of spreading out to others. Do you believe that's really true?
I think that's the opportunity, is the broadening of the market. I think that's what people should be looking for. Look, how much do people not know about the Magnificent Seven or the Fantastic Four, whatever it is? Everybody knows every little detail. They're overcovered by the street. It's impossible to find something that people don't know. The opportunities are elsewhere in every other market, in every other part of the world, in small caps in the United States, everything. It's like the whole world is underfollowed relative to the Magnificent Seven.
Where else in the world then would you be looking? Because you're right, we don't spend a whole lot of time talking about the rest of the world. We're often looking for opportunities right here in the United States. And as aforementioned, of course, the Magnificent Seven. So give us some ideas.
Right. Well, the story applies to small caps in the United States as well. I mean, if you look at coverage in small caps, it's woeful. I mean, there's very little attention paid to small caps, which is typically true, except when you have big small cap bull markets. But outside the United States, whether you're looking at a place like Japan, whether you're looking at emerging markets, whether you're looking at commodity sectors around the world, there's really a ton of opportunities that people just refuse to look at. And I think, there's no sound wealth building strategy that says put all your eggs in 7 stocks. There has to be some opportunities outside the United States and in smaller cap stocks. And that's really what we're trying to find, as opposed to joining the crowd in the 7 stocks.
Does this stock investing environment remind you of any prior era or historical analog in investing? I'm thinking back to the dot-com boom with JDS Uniphase and CMGI and so on and so forth.
Right.
Now, a lot of those companies didn't make money. A company like NVIDIA makes a lot of money. But are there any analogs that you can think of? And what lessons would you derive from them for today?
Right. So, Tyler, I think there's a misconception that the stocks in the tech bubble didn't make money. There were a lot of large cap tech companies that made money and subsequently underperformed dramatically.
Well, Dell did, and Cisco did, and
and IBM and Intel and Cisco. I mean, Microsoft was one of them. But even among those companies that were making money, had strong balance sheets, were cash flow positive, all of the above, the best of them, it took you 6 years, 5 to 6 years to break even if you had bought at the peak of the tech bubble in March of 2000. The worst, it took you about 20 years in the worst case. So it was almost, like Cisco was like the Japan of stocks. It took so long to come back and break even. So I think the notion today that we're looking at real companies with real earnings is ignoring the concentration risk and everything else that's there. As I said, there have to be more than 7 growth stories in the entire global equity market. It's just such an amazingly bearish view of the world to say there's only 7 companies we can invest in.
When you're thinking about other opportunities, at the top of the show, we talked a bit about Bitcoin, the run that it's had above 57,000 and sort of it's doubling. We obviously now have Bitcoin ETFs. If you're an investor that might want to look at this and say, hey, I don't want to miss the next run up, what would you advise? Should we look at an ETF rather than Bitcoin itself? Or is this game just still a little bit too dangerous to play?
Well, I'm sort of notorious as being anti-Bitcoin and anti-cryptocurrencies. I think the crypto crowd probably has dartboards with my picture on it, I'm sure. But I think we tweeted today a very interesting chart. And the chart shows you financial conditions and the easing of financial conditions and the performance of both Bitcoin and NVIDIA. Now, I have to say, we own some of the stocks that we've been talking about in some of our portfolios. Just want to be full disclosure here. But the number one factor that is affecting both Bitcoin and NVIDIA is financial conditions. It's liquidity. And that's one of the signs of a highly speculative market, that it's not fundamentals, it's liquidity.